Hello everyone. We are making this video because we have got a bearish engulfing in the monthly chart of Nifty. We'll try to discuss more about this in details one by one. That is, first of all, have we got any previous bearish engulfing? What do you mean by bearish engulfing? What are the other indicators which talk about bearish engulfing, and what is the chart like? What does it look like? And we'll also try to see what has happened in history. I mean, like, are there been bearish engulfing? Should we be fearful about this bearish engulfing candles, which are especially there in monthly? So let's try to look at them one by one. So first of all, as I told you, yes, in the month of December. So this is the month of December that we have. And in the month of December, yes, we have got a bearish engulfing. So what do you mean exactly by this bearish engulfing candle, which is there? So let's try to have some theory part. So if we look at the theory part, yes, this is what it is. It looks like, yes, this is what is a bearish engulfing. So the candle before that, it can be a bullish candle or a bearish candle, irrespective of the candle which is there. Yes. But what is more important is if the candle, let's say, for example, this is a bullish candle that we have on the previous month. So because we are considering a monthly chart as such, especially, so let's consider month rather than a day, right? So this is going to be the opening and this is going to be the closing, the open and the close of the candle which is there. What happens for a bearish engulfing is it engulfs the previous candle which is there. That is, the opening of this candle in terms of monthly is going to be a gap up opening that is above the close of the previous candle, and the closing of this candle is going to be again below the opening of this candle. So if this is a red candle, the opening can be at high and the closing can be below that. So irrespective of the opening and closing, what happens in a bearish engulfing candle is this is first of all a red candle. The opening is above the opening or the closing of the previous candle, and the closing of this candle is below the opening or closing of this candle. Now, one very important thing that we need to understand is we are not bothered about the high or low of either this candle or this candle, right? We are just considering the opening, closing, and here also the opening and the closing, right? So this is the first and most important thing that we need to understand now, because this is a monthly here. In our case, because we are considering a monthly chart, so this is the monthly chart, we have to assume that the opening is a month and not a day, which has been given over here. So that is the only difference that we are considering. Now what happens with this bearish candle exactly? I mean, like, should we be fearful that there would be a bear cycle coming up in the future? So let's try to check out. We'll try to check out first of all in terms of history, and we'll also try to check out in terms of the indicators. So first of all, let's try to take in terms of indicators. If you are getting some kind of indication how the market would be. So here we will be using some standard indicators, which is there is RSI and second is MACD. Yes, so these are the two indicators that we are having. So what we have done from our side is we have just tried to identify few of the previous, let's say, for example, this is our bearish engulfing candle which is there for the month of December, right? So this is our RSI. We have marked this probably, let's say, as my previous high, right? So for this, I probably this line which is there. So with this, we have marked the high. Now we are not at the exact high, but let's try to mark that also if possible. So it is 70.3254. 3254. So we have the precise exact point, right? So what we know over here is this candle, which was, let's say, the closing of this candle was 17,670, right? And the RSI value, which I got it over here, was 70.324, right? Now, even if you check the previous candle, this is probably, let me mark over here. So just for a different purpose, I'm marking it red so that we are able to make out the difference as such. Now let's try to see out what is the difference. So RSI over here has been 60.3254 and RSI over here has been 65.6778, which is there. So this marks somewhere around, one is a downward trend. So if this is a downward trend, let me mark with a red, right? So what has been happening over here? We see a bearish divergence, right? So what has been happening is there is no strength in the market. We are seeing that the market is losing its strength as such specifically, right? Because in terms of RSI, if I see that if at this point my market has given a closing above this point, right? Precisely, my RSI should be also going above 70 in terms of technical terms. We are talking purely in terms of technical analysis over here. So here, my RSI over here in the month of November compared to the last October month, right, should be going on a higher part. But here I see that the strength, which is in terms of RSI, relative strength index, here has been 70.3254 and here it has been 65.678, right? So I somewhere see that the strength has been losing down, right? So this is the first and most important thing that we are able to identify over here. Let's try to see in terms of MACD also. Now MACD, yes, till now, if you see precisely, we haven't got, this was the first crossover where the market started coming down, but we haven't got a second crossover here now till now. Probably this is still been continued, so it won't be like okay fine, it will be going down. So probably it will start moving down further over here, or it may have a small crossover and after that it can start moving down. So this may also happen, we are not pretty sure for that, right? Now if you compare in terms of histogram, yes, so let me just draw a line over here in terms of the histogram part so that it will be easier for me to understand that part. I'm just making it black in terms of color. So this is my zero line, more of, let me make it zero. So 0.00. Of course, it won't be coming to the exact 0 point as such, but yes, if I check out in terms of, let's say MACD, yes, it has been more of into downtrend, right? The red line that you see, this is on the top, and the blue line, which is there, that has been then in the bottom part. So ideally, it should be more of on the upward part so that we can say that, okay, fine, this is going into the uptrend part. But this crossover has not been gone, and not has been successful till now, right? So that means the blue line has not crossed over the red line and gone up, right? Which generally has been the case. For example, over here in October 2020, we saw a crossover, and after that, the blue line which was there, that was continuously above the red line. But here we don't see that. That means that, okay, fine, there is a continuation of the bear cycle in terms of MACD as such specifically, right? The blue line is still down. That is the first part. So if I check out in terms of RSI as well as MACD, yes, RSI, I see a pure divergence, that is a bearish divergence, which are able to see in the monthly part, right? So this is a clear indication that yes, there is a bear cycle that may follow further. And second is in terms of MACD, yes, again we see that weakness which is there. In fact, the market has gone up, but precisely with the market going up, yes, we haven't seen that the MACD has also gone up, does not gone till up, right? That is, the blue line is still lying below the red line. So this is a cause of concern as such. So talking in terms of one is the bearish engulfing, talking in terms of RSI, that is the second signal, and in terms of MACD, that is the third signal. We see that, okay, there is still weakness in the market. In fact, when you see that the price has been rising, the RSI and MACD both have not been rising. So this is an indication of the market going down. We have to analyze everything in terms of price. RSI and MACD are pure indicators. That's why they are called as indicators. Why? Because they give an indication about the market. They are no confirmation. So what would give me a confirmation at such specifically? So if you're talking in terms of confirmation, let's try to look into history. What has happened into history in terms of various bearish engulfing. So if I come down to this chart, yes, and if I try to compare this on the basis of various bearish engulfing, yes, we can see that, okay, in the market, we have got various bearish engulfing. This is a bearish engulfing. This is a bearish engulfing. This again is a bearish engulfing. this one, all of these parts we have seen that, especially we have been seeing all in terms of bearish engulfing. Now let's try to compare some of the bearish engulfing and try to identify what were there a successful bearish engulfing as such, or there were midway chances that the market can go up from here. Let's try to analyze more of in terms of details, right? So we have this red lines where we see that the market has been going down. So for example, we know that this was the 2008 fall, this was the 2010-11 fall, this was the 2015 fall, 2020 fall. Now what we see over here is, let's say for example, we'll draw one more line. This was again a bearish engulfing, and yep. So we have these red lines. So now what we see is one very curious thing that we are able to identify clearly over here is, let's forget about this line at this stage. 2004 there was a bear cycle, right? 2008 there was a bear cycle, right? So that is a gap of 4 years. After 2008 it was 2011, 12. So 12 started overall for an uptrend. So from 2004 onwards, 2008. So 2008 we started with an uptrend as such basically. So that is 4 years. 2008 to 2012. 12 we started with an uptrend. So this was the end of bear cycle in 2008. This was the end of bear cycle in 2012, right? So that is again 4 years, from 2004 to 2008, 2008 to 2012, 2012 to again 2016, right? We see a end of bear cycle and then start of a bull cycle. So that is again a period from 2012 to 2016, again 4 years. After 2016, yes, it was January, March 2020. So again 2016 to 2020, that is again coming after a period of 4 years, right? So if you calculate in terms of maybe the same cycle in terms of symmetry as such, so after 2020, it comes to 2024. Technically, ideally, we are talking about just past cycles. We are just purely talking about cycles. 2004, these are the dates which have been marked over here: 2004, 2008, 2010. So probably this was the top part which is there. So we have to probably consider the bottom. If I consider this as the bottom, this as the bottom, again, this is the bottom, this is the bottom. So, right. So we have 2004, we have 2008, we have 2012, we have 2016, we have 2020, and the next date, probably just a wild guess, just a wild guess. I'm being very precise, just a wild guess. It can be somewhere around 2014. So let's say assuming March 2024. So don't consider that, oh, okay, I'm talking about or giving a direction as such about March 2024 as such especially. This is just an approx wild guess from my side. We'll need to go into the calculations for that and try to discuss about the exact dates. So this is just a wild guess. So 2004, 2008, 2012, 2016, 2020, 2024. So this is a 4-year cycle that we have seen. This is just on the basis of the previous bear cycles that we had, and the years of bear cycle were 2008, 2012, 2016, 2020. Next can be 2024, where the bear cycle has ended, and after that we see a bull cycle, right? So if the bear cycle has to end somewhere around in 2024, it has to start somewhere, right? So if where has it started? So let's try to look at some of the historical facts that we have. Let's say, for example, we have few cycles which is there in, so am I missing something on this part? Yes. So let's say, for example, 2008, 2010, 11, 2015, 16, 2020, we had bear cycles which were there. So from the top to the bottom, this came down somewhere around in 10 months, right? So let's try to calculate that. So if we start from here and we have the calculator in terms of date. So if we start from here, this is somewhere around going to be 9 bars. So starting and including this should be 10 bars. So let's try to move it 1 bar ahead so that it becomes easier in terms of the calculation part. right? So I'll probably start with one candle before, just to make it simpler for us. So this is somewhere around 14. So next one was again starting with the same dates. So if I start 1 month earlier, so that we have the precise dates, 12 hours. Here it was a very small one. So probably somewhere around just 2 months. If I consider over here, probably we'll getting 3. So what we have in terms of figures is the 2008 cycle was 10 months. So we got this 10 months, which is there. The 2010-11, this was 2010-11, this was 14 months, 14 bars. So we have this 14 over here. 2015-16, it was 12 bars. So we have this 12 over here. And 2020 was again a very small one, which is just around 3 bars, right? So we are not pretty sure at this stage what would be happening next in terms of price, in terms of time, right? So, but we should be having some conclusive parts, what exactly may happen. So this can be a wild guess as such specifically. So let's try to identify a few of the more things which are there in front of us. So this is just maybe probably a small cycle of the previous reversals. So ideally, if we check down from this low to the high and then the reversal, this had come down to maybe somewhere around 0.236 in terms of the Fibonacci levels that we see. This was again looking at the low and the high, right? So we're just talking about the low and high. We don't want to see anything else. Let me take this to the center part in terms of Fibonacci. So this is at the center. We don't have to look here and there as such specifically. That's it. So let me just reduce these values from this point to this point. So we had a high, we had a reversal, again 0.236. So 2008 reversal which was there, that has come down to 0.236. This is the second reversal which has come down to 0.236. We have this third reversal. So this was my low, this was my high from 0 to 1, and then the reversal. So this reversal has come down somewhere around to 0.5. This was there of 2011-12. And we have this fourth cycle which is there of, so yeah, if I consider this the low and the high and the reversal, this has again come down to 0.5. So let me be over here. So this is 0.5. This is again somewhere around 0.5, not exactly to the 0.5 level, but yes, nearer to the 0.5 level. So we have two levels, range reversals, which has come down to 0.5 levels, 0.236 over in 2008, 2020. And we have this 2010, 11, 12. And we have this 2015-16 cycle, which has come down to around 0.5 levels. So this is what we see, that probably that should be coming down to those levels. So it would be much more easier for us to do the calculations, right? So if it comes down probably to in terms of those things, yes. So ideally the calculation should be much more easier for us. So if I just draw a Fibonacci from the high to the low, so my low over here has been 7511. So I just know these numbers now, 7511.1, right? So because this is the candle and the candle low is 7511.1, and the candle high has been 18888, right? So this is the precise number. Yes, why? Because we have traded that. We have already told in our Telegram group about that. Yes. So if you check out on our Telegram group, this is our Telegram group. The name of the Telegram group is Unit of Technical Analysis. This is a channel. This is not a group. I beg your pardon for that. And somewhere around on 1st of December, specifically, to be precise. Yes. So already at this high of 18,888, we have already told that, okay, the market will be coming to a high of 18,888. We already made a video regarding that. So we'll put across the link for that video also. So if you have not seen that video till now, probably we see that most of the people have seen this video in Hindi as well as in English. So we don't have to tell that again, but yes, we have already talked about this on 1st of December, and we have also talked that, okay, there will be some major downside movement coming in the further days, right? So We are not pretty sure whether the downward movement has been done till now or not. Yes, this can be a major move, a minor move. We'll only come to know about that in the future, what exactly should be happening. At this stage, we cannot say that, okay, fine, the market would start moving down further, right? So we're not telling that as such. Trade on the basis of the risk and the appetite that you have, nothing more than that. But yes, if the market would be coming down probably to the 50% levels, so this is what we expect the market to come down if it has to come down. So that would be to exact 13,199 levels, which is there, which we probably think should be coming down to the market as such, because there have been cycles into the market which has probably been coming down to the 50% levels, or maybe to the 0.236 level, either of them. 0.5, so here has been 0.5, 0.5, here has been 0.236, 0.236. We here have been just considering about the first level, which is 0.5. So ideally, this is the level where the market should be reversing across to. If it comes down further, probably, which should not be the case, it would be a disaster as such if the market comes down to those levels, specifically, right? So this can come down to probably 13,199 levels. We are not pretty sure if it goes down further with the bearish engulfing. Yes, this would be there. And tomorrow, probably the market tries to take a support and go up further. Yes, definitely it will be going up also. Depends on the trade, how it will be taking further on the daily charts, more of into that part. Yes, but if you look at the smaller parts, yes, definitely the market has given us such kind of indications which are there. Let me give you some of the indications that we have been telling from our side. So yes, so this was the first indication, right? What was the indication like? So this was my high, this was my low, and the reversal has come down, and after that it has come down exactly to level 2 as such. So probably let me just remove this at this stage. Yes. So yes, we can see precisely over here how the market has been going and how the market movements have been done. Yes, bang on the point with those levels, high, low, probably to this low. Yes, the reversal. So probably the first reversal which was there on 14th of, and after that the market did come down. So probably this was our first closing, and after that the second one. So yes, we have definitely talked about this also into the parts. So this was somewhere around 20th of December. Let me check with the charts of 20th of December, because yes, we did inform about that part. 20th of December. Yes, so this is 20th of December. Yes, in the afternoon part. So this was the first reversal, and after that coming down to the 1.272 level. Yes, probably that was there, and after that, yes, probably did a back testing from this levels and again started coming down. So yes, it happened. It went up, and probably from there again it started moving down. So this is how it is. Probably we again think that the market from probably this levels, if it comes up, this would be my first level of resistance. This is my second level of resistance, which is there, right? So if this becomes my complete range as such specifically, so this would be my first resistance level. So this is more has been the resistance level. Yes, today probably that is on Friday, maybe the monthly chart, the monthly candle had to complete a bearish engulfing as such specifically, so that's why it has come down. So naturally in a day or two or something like that, yes, it may come up to this levels, or probably just try to move down also further. We have to trade on the basis of the trend that has been happening more of it, but definitely from the top coming down, yes, we are able to catch up with the reversals as such. We're definitely waiting for this levels more of, because we were pretty sure, or maybe in a confused stage at that part. Why? Because we were also thinking that, okay, this should be a bearish engulfing monthly chart. Why? Because as we told to you, the scenario which was there on the bigger part is terms of RSI as well as MACD, this was not very satisfying, or it was not very convincing that the market strength should be going up as such further. So this is purely on the basis of the indication that we had. Of course, about the price as such, yes, we did think that the price should be going up as such specifically. So definitely from our side, we had talked about that in the previous video, that the market would be going in terms of price. Yes, it should be going up and after that coming down. So you can refer to the previous video, especially for that part. But at this stage, yes, let's try to check out in terms of price what exactly would be happening. So it can go down, it can go up further. Yes, so this would be my first resistance, this would be my second resistance. If it comes down, maybe gives me some indications in terms of smaller. This can be again in terms of bearish engulfing or other charts or other indications which are there where the market would start moving down further. Yes, definitely it would be going up, right? So yes, definitely this can also be happening. And with that, as I told you, let's try to check out what has happened in the previous monthly parts, especially in terms of bearish engulfing. So yes, so this was the previous engulfing that we had over here. So this was a clear-cut bearish engulfing that we see. So the chart over here has been clearly in terms of the bearish engulfing that we see over here. Yes, the opening has been above this level and the closing again has been below this level. So if you see from the top, yes, we got some good downward movement. So if I check out in terms of high, so probably from this high to this low, this was somewhere around 3000 points, a good downward movement as such. Specifically again a bearish engulfing. Yes, this has been the bear cycle of 2020, right? So again, this is a good one. Yes, we got probably more of success into that. This were smaller and in between bearish engulfings which were there. So it may happen that the market may come down somewhat, a bit, not more of on that part, right? And after that, probably again push or maybe push down further. It may happen because this is the first midway bearish engulfing. This is the second bearish engulfing midway. I'll just try to zoom it over here, so you can just calculate in terms of maybe this is on 2nd February. Sorry, February 2018, and this has been September 2018. So probably you can just check out with these charts. And this one was again September 2016. Yes, we saw a small downward movement over here, right? So this was more like a reversal. Let me show you this reversal also. So if this is my high, this is my low. Let me just, yes. So we have this low, we have this high, and this has exactly come down to the 50% level. So yes, this was quite successful, not more of as a bear cycle as such, especially, but yes, as a major level where we see an indication of the market moving down. So let me put it as it is over here. Yes. So again, this bearish engulfing has been successful, maybe at the 50% level. This one was not successful. This one was, because it took the market down. This one was again not successful, pretty successful, you mean to say. And yes, so this was the bearish engulfing of 2010. This happened in the daily part as well as the monthly part, both of them. So market started moving down further drastically. So yes, this was a midway. So if you compare over here, yes, this has been more of to do with, now let's say over here. If I remove it over, I can say, let me put down maybe probably a candle over here, but maybe with a different color. Let's say I'll put it yellow. Now, what we want to show in terms of comparison is, yes, there was a bearish engulfing over here, and no, this is not exactly a bearish engulfing. Probably this was, yes, this was a bearish engulfing, right? So if I check down, yep, the high or maybe the closing of this candle was 5201, and the opening of this candle was 5200.9. So it was very, very close, more of in terms of the opening and closing. But the closing of this candle was very low over here. I'll try to show you more examples regarding this part. Let's say we have this bearish engulfing, which was there of 2008, right? So if I check down this 2008 bearish engulfing, yes, the closing of this candle has been 6138.6, and the opening has been, so it is 38.6, and the opening has been 36.75. So the closing has been 38.6 and the opening has been 36.75. So there's a small difference overall as such specifically. in terms of the opening. So this cannot be exactly called as a bearish engulfing technically in terms of the theory that we have. So we are talking about this theory, right? So we shouldn't be believing more of into theory also. Technically, whatever is practical again, yes, if the market goes down, if it gives you confirmation, definitely you should be considering those confirmations, because market is supreme. We're not talking about any kind of theories, we are just talking about back testing. That is more important, relevant for us to check out with those things. You can always go into the weekly chart, you can go into the daily chart and try to identify what are the kind of chart patterns that have been formed over there, right? So if you check out in terms of history, yes, definitely we'll be able to get a better understanding, better idea about all those things together. So this may happen that things would be able to fall out, and theory cannot practically work out everywhere every now and then. Yes, we just saw over here the closing of this candle has been 6138.6, so it has been 38.6 precise on the closing part, and the opening of this candle, which is on the top part, has been 6136.75, which is just below the closing part. So technically, yes, this is not a bearish engulfing, but yes, still we consider that. Why? Because the candles have been formed and after that the market has gone down, right? So try to judge more of this is market, this is no theory part that okay, only theory would be working, practical parts are totally different. So try to stick to your uh, trading strategy more of, try to understand how the market movements have been given, how the candles have been formed, maybe in the weekly part, into the daily part, and then try to trade on the basis of that, because that would be much more fruitful rather than just going on the basis of one indication that we have, right? Otherwise the whole entire downward trend have been missed, right? So try to understand, try to see what exactly has been working, what is not been working together, right? Again over here, if I check down, the closing of this candle has been 3557.6, so I consider 57.6, and opening has been again 57.55. So again, to be precise, yes, in terms of points, a small miss, as especially in terms of the opening closing. The closing, again, I'll show it to you, it has been 57.6, and this is in the month of April 2006. I'm just trying to be precise. This candle, just telling on your part. So this is what? This is April 2006, and the next candle has been of May. So the opening has been 3557.6, and the opening of this candle has been 3557.55. So 57.6 and 57.55, just a minute difference of 0.05. But yes, talking in terms of the theory part, yes, this has been fruitful. This has been giving us a result that there was certain downtrend as such, especially coming into the chart part. So if I consider that, giving me around 1,000 points in 2006 was a huge part, right? 2006 is around 17, 18 years. I completed my MBA during that part and probably was being recruited by one of the MNC companies during that part. So I understand the value of money during that part, and 1,000 points would be really huge. At that time, I probably had just opened my Demat account at that part, just started trading. So understand these things which are critical. Again, if we go into the history part, yes, we'll be seeing various other bearish engulfing candles also, and this has been more of this top, this has been at top, this has been at top, and we see further downward movement. So ideally, if you want to consider over there, try to see the intraday charts which will be happening, right? So that will be the first and most important examples, because we have been getting indications more of that the market would start moving down further also on the basis of RSI, MACD. These are few of the indicators that most of the people do use. And if you try to see or maybe judge on the basis of this, yes, we are seeing certain downtrend where the market is trying to move down further, right? But at the end of the day, it would be all pricing. It can happen that tomorrow the market would start moving up also. There is no pretty surety on the basis of that. But yes, we have already told you what we see further and what would be the price movement if we see and try to judge that the market comes down, maybe probably on the basis of that. And if probably the market has some kind of levels which it has to put down, maybe as resistance, this would be my first level, this would be my second level. And again, if the market starts moving down from here, this would be my aggressive move where I'll start moving down further, probably to my first target of somewhere around 17,500, 17,000 levels. And probably after that, again, I'll see one more move, probably from here onwards, right? And probably if that has been completed and after that the market starts moving up further, or probably from here to here, so it should be somewhere around, right? And if I check down further, probably the fall should be going on maybe from that point going down further, and maybe probably there should be one or two upside movements, and after that the market would start coming down. So ideally, technically, this is how it looks like at the start. This is just an approx theory that I'm trying to propose for my side. This is purely for educational purpose, nothing more than that. Yes, you try to trade on the basis of the advice that you have from your financial advisors, and only do trade. Okay, fine. If you have any kind of doubts, yes, you put down your queries all together. We have been always been helpful for all the things together. This is our contact details on Telegram, and we have already talked about our Telegram channel, which is there. That is Unit of Technical Analysis. Thank you so much, and hope you have a fruitful next year. That is 2003. Thank you so much. Bye.